Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report so exciting, it's almost like finding out your favorite stock just invented time travel almost. Just kidding, but this report shows exactly what's happening inside the Alger funds. Full uncover which investments soared, which investments sank, and whether they're making smart money moves. If you're new to the channel, welcome. We simplify Wall Street jargon so you can make informed decisions. And for our regulars, let's not forget our Discord community, linked in the description below. Alright, this semi-annual report gives us a peek into how the Alger funds performed all the way up to April 30, 2025. It tells us about their investments, how they're doing, and what it all means for shareholders. Let's get into it. This document mostly talks about the investments in specific Alger funds, so you can think of each one as its own smaller investment portfolio. We will touch on key points such as their individual stocks and more. First up is the Alger Capital Appreciation Fund Class A. Let's see what happened with its cost. Basically, this tells you how much it costs to invest $10,000 in this fund. For this time period, it was $63. That works out to be 1.27% of your investment. Think of expenses as the cost of running the fund. It includes management fees and other operational costs. So, how did the fund actually do? For this period, the fund returned negative 0.83%. How they put it, management sector weightings were information technology and communication services. Communication services and financials really helped the fund overperform, as these sectors were the largest relative performers. On the flip side, consumer discretionary and consumer staples were the biggest drags. So basically, while some areas performed great, some mostly consumer-related stocks were a big underperformer. The report identifies a few factors that affected the fund's performance. Resilient corporate earnings and AI-driven capital expenditure were positives to the outcome. However, higher tariffs and rising economic uncertainty weighed it down. Now let's switch gears to the Class C shares of the same fund. This fund says similar things to the other fund besides the costs. A $10,000 investment costing shareholders about 101 or 2.04%. And last we have the Class Z, and again a similar story. Its expenses were far lower, however, with a $10,000 investment costing $45, which is equal to a 0.91% expense ratio. Moving on to the Alger 35 fund, we see that its expenses were only $28 for a $10,000 investment, or just a 0.56% expense ratio. Class Z in this fund did well, with a 1.66% return for the last 6 months, while overweighting communication services. Alger noted that the AI boom was a main contributor, but high tariffs and economic uncertainty were a drag on performance. Now, in case you forgot, here's a breakdown of these costs as of April 30, 2025. Then again, the fund is not too large, with only about $31 million in net assets. Here, breakdown of the sector allocations, with mostly information technology at 36%, with communication services at second at 22%. Moving on, Alger Growth and Income Fund had more standard expenses, with costs of $45 for Class A, or 0.91%. However, this fund underperformed with negative 2.05% return for the period. Net assets totaled $650 million. Heavy in information technology and financial, its largest overweight were energy instead of communication and consumer staples as the prior fund. Alright, so we talked about a few of the prominent Alger portfolios. As we are reaching the end of the report, you can find all of their websites in the description. And finally, the Alger Health Sciences Fund cost you $52 for $10,000. Unfortunately, this fund went down with a negative 14.51% return. And again, many of the same holdings in the technology industry led to its outcome. And this fund is focused on different market sectors, with healthcare being its primary. This could explain some of the drastic differences from the other portfolios. Finally, management sees resilient corporate earnings, but aggressive tariffs weighed down on the performance. Alright, let's give some final thoughts. So what's the real story here? The funds are definitely riding the AI wave, but they're also getting hit by global trade tensions. The Capital Appreciation Fund had decent contributions, and is one of the better choices that Alger has to offer given its stability and diversification across the market. With low expenses, however, this isn't saying much other than the Small Cap Growth Fund, lagging behind in a bunch of sectors that we looked at. Despite what their names suggest, I'd say to avoid those funds for now, as you can get higher yields in something like VU Fund, are lagging behind in a bunch of sectors that we looked at. Despite what their names suggest, I'd say to avoid those funds for now, as you can get higher yields in something like VU Overall, it's not a great showing for Alger this period. Unless you are very bullish on a specific overweight sector, you might want to reconsider a safer option for guaranteed returns. That's it for this breakdown. What stocks are you paying attention to, and how does AI capitalize on them? The like button and subscribing really helps the algorithm push this out to investors. And don't forget to check out the Discord server for live discussions and more in-depth analysis.